In 2019, one company was worth $47 billion. It wasn't profitable, it wasn't stable, it wasn't even clear what exactly it did, but investors couldn't get enough. Then, in just a few weeks, everything collapsed. Not slowly, not quietly, in front of everyone. This is the story of how WeWork went from being the future of work to becoming one of the biggest financial reality checks of our time. Adam Neumann wasn't just building offices. He was selling a vision. Not desks, not buildings, but community. WeWork promised to redefine the way people work. Flexible spaces, creative environments, a global network of entrepreneurs. It sounded like something bigger than real estate, and that's exactly how it was marketed. Not as a real estate company, but as a tech company. That one idea changed everything. Because tech companies don't get normal valuations, they sell dreams, and investors bought into it, big time. Money started pouring in. Who was the biggest believer? SoftBank and its Vision Fund, billions of dollars. The expansion was aggressive, new cities, new buildings, new promises. At its peak, WeWork was leasing massive office spaces on a long-term basis, and renting them out on a short-term basis. That mismatch Dietz was a ticking time bomb, but no one cared. Because growth was everything. Revenue was rising. Locations were multiplying. And on paper, the future looked unstoppable. But behind the scenes, the numbers didn't make sense. Massive losses, uncontrolled spending, strange decisions. For example, buildings were being bought and then leased back to the company. Apartments were being branded as We Live. There was even talk of launching a school. And at the center of all this was Adam Neumann. Charismatic, visionary, but at the same time, reckless. Private jets, wild parties, and decisions driven more by ego than logic. Still, as long as private investors believed, the illusion would continue. Then the breaking point came, the IPO filing. For the first time, everything was exposed, the losses, the governance problems, the conflicts of interest. Investors saw the truth, and their reaction was brutal. The valuation dropped from $47 billion to under $10 billion, and then even lower. The IPO was canceled. Adam Neumann stepped down. And the company that once claimed it would change the world was suddenly fighting to survive. This wasn't just a business failure. It was the collapse of financial psychology. So what really went wrong? 1. Story greater than reality investors believed the narrative, not the numbers. 2. Growth without foundation. Growing fast does not mean growing strong. 3. Mislabeling the business, calling a real estate company tech, doesn't make it one. 4. Blind trust in leadership. Charisma can hide risk, and when the truth finally comes out, it doesn't correct slowly. It collapses suddenly. WeWork did not fail because people no longer needed offices. It failed because reality finally caught up with the story. And in finance, that always happens. The real question is, will you be able to see it before everyone else does?